Hello and welcome to MF Corner. I'm Sonal Bhutra in the Mumbai studio. Today we put focus on Contra funds. Standing out from the public is fun, isn't it? And that's what Contra funds are somewhat like. To understand exactly this and learn the art of finding themes that are undiscovered in the market, we have with us Shubhani Sarkar-Kurian, Senior EVP and Head Equity Research at Kotak Mahindra AMC, and Hemant Rustagi, CEO at Wiseinvest. Shubhani and Hemant, thank you so much for joining in today. And Contra funds, something that we've not discussed in a long time, and this is a category which is generally done well as well. Shubhani, let me start with you first up. What is the entire idea behind Contra funds? When do generally AMCs look at this strategy? And looking at the Kotak Contra fund as well, some of the known names are there as well. So what is the entire strategy there?
Hi Sonal, good afternoon. So yes, the basic concept of Contra is that it is a value bias fund. It buys value over price. So what it basically, in terms of philosophy that we are saying, is that it's often better to buy a wonderful company at a fair price rather than a fair company at a wonderful price. So the starting point in terms of investment style is to look at companies that have underperformed the benchmark or which are trading below their long-term average valuation. So there is a value element to it. For us at Kotak Contra, while it is value biased, it goes one step forward in terms of strategy. And therefore, while we are investing contrarian to the market in terms of the sectors and stocks that we are selecting in the portfolio, we are also looking at triggers that will lead to multiples re-rating over a medium-term perspective. It could be companies where we believe that there could be certain changes in fundamental attributes which can therefore lead to that multiple re-rating. So for us, while the basket of stocks that we choose for in terms of the composition of the fund is value, and therefore we are looking at stocks or sectors that have underperformed the market, but there is a overlying theme on top of it where we use our internal model of business management in order to identify these companies where there will be re-rating or triggers for re-rating in terms of the sector or for the companies that we are buying or building into our portfolios. So that's the basic theme when we are looking at Contra in terms of how we manage Contra as a strategy at Kotak.
Okay, all right. Hemant, getting you in the conversation as well. It is not a category which sees a lot of schemes already. So what do you think is the entire idea here when fund managers go about looking at the strategy? What are some of the major points?
Oh, you're absolutely right, Sonal. I think there are just 3 funds in the industry right now. But I think as a strategy, it's a strategy that works really well, but may not be suitable for all kinds of investors. The idea is, to put it in a very simple manner, is to maybe buy stocks during the low phase, maybe undergo some pain in the near term and benefit from the long-term potential. I think that's what usually a Contra fund will do. I think there are a number of opportunities that keep coming their way, especially when the companies are in the turnaround phase or the growth multiples are getting re-rated, or when the growth companies are available at cheaper valuations. So I think there are a number of opportunities that fund managers can look at and benefit from that. So I think, again, I personally feel that Contra fund can be a great addition, especially for those investors who have experience, who have built a decent size of portfolio already, and they can kind of supplement their long-term portfolio by including Contra fund in their portfolio.
All right. Shubhani, coming to you, first I wanted to understand what are some of the benefits that an investor can look at when it comes to investing in Contra funds. And I was looking at the performance of Kotak India Contra fund as well. It's done well over a 1-year period, over a 2-year period, over a 10-year period as well. But the constituents, some of them are some of the well-known names, the likes of HDFC Bank, ICICI Bank, Infosys, Reliance Industries. So I just wanted to understand the composition here again.
Yes, so, when we start off in terms of building, as I said, the universe of stocks from which we invest in at Kotak Contra Fund, the idea is to find either a stock or a sector which has underperformed the benchmark, stocks which could be trading below their own historic average multiples, or stocks which are trading below valuations of their own peers within a particular sector. And therefore, the starting point of evaluation is value, or looking at investing in companies which are undervalued at this point in time. And therefore, from an investor perspective, if you're looking at a fund which of course with a longer term investment horizon, in order to fulfill the potential of these contrarian opportunities, this sort of a fund is clearly suitable for those investors, especially also in times of volatility, because there is a value bias in terms of how we run Contra. This is also something that is possibly sound as an investment opportunity in times of volatility. Of course, one has to be a little patient because many of these companies or sectors are contrarian to the current market theme, and therefore there has to be some time given for that theme or for that stock view to play out and lead to re-rating of valuation multiples, which is the basic idea behind how we construct the portfolio. So in a nutshell, when we look at the universe of stocks to invest in, we are investing contrarian to current market theme, and hence there is a value bias, and hence valuations are fairly reasonable. But on top of that, we are putting our own fundamental filters in terms of our internal models, which is the BMV approach of business and management. And therefore, choosing those companies where we believe that there is a clear case for multiples to re-rate from here on.
Okay, take that point. That explains it well. Hemant, let me come to you. It's a two-part question. First, what according to you are the benefits of investing in Contra funds? And second, are returns in Contra funds better than that of usual equity funds? And is there a time period when these funds do better than those regular funds?
Yes, Sonal. I think when we talk about the benefits, there are quite a few benefits of investing in Contra funds. One, I think they have the potential to deliver higher returns than the normal diversified fund. Two, as I mentioned earlier, I think a long-term investor or experienced investor can include Contra fund in their portfolio to supplement their long-term investments, because Contra strategy works very well over the longer term. And also, I think investors benefit from the diversification when there is a rotation between value and growth. And also, of course, they benefit from the capacity and the capability of the fund manager to pick undervalued stock at different time periods. So I think there are a number of benefits. In terms of performance, I would say that almost all the Contra funds that are there have beaten outperformed their benchmark, which is Nifty 500 TRI. Contra fund have consistently done better than plain vanilla diversified fund like flexi cap or large cap. Of course, it's important to mention here that the risk profile of those funds and Contra is very different. And there are times where Contra funds have done better even than large and mid cap or multi cap fund also. So consistently, I think, like I mentioned earlier, if one includes Contra fund in the portfolio, it definitely helps you in benefiting from a different investment philosophy, and also maybe improve your overall portfolio return over the longer term.
Okay, take that point. So Shibani, just taking that point forward, would you say these funds are not for first-time investors? Is a lot of risk involved in investments here? Who would this be suitable for in your opinion?
Yeah, so a Contra fund essentially is finally a diversified fund. For us, the way we run Contra, our strategy across market caps is flexible in nature. So there is no constraint in terms of market capitalization between large, mid and small. And therefore the risks associated with Contra is something that are risks associated with equity funds. Of course, given the category, the risk would be slightly higher in terms of, where you would, as you were discussing, say in a flexi cap category. However, remember as a starting point, when we are looking at Contra as a fund philosophy or a theme, the starting point is to look at undervalued companies. And therefore, from a risk perspective, when you're looking at valuations, we are investing in companies where clearly valuations are, at this point in time, in our opinion, fairly reasonable, or these companies or sectors are undervalued. So from that starting point, remember these are for investors who therefore have a long-term investment horizon. They want to realize the full potential of these companies as the re-rating opportunities really play out. And also, as I was mentioning earlier, that in a market which is typically volatile, because the overall composition of the fund is such that your valuations are reasonable, this could be sound investment opportunity, especially in times of volatility. To give you an example, today the way we run Kotak Contra fund, the PE of the fund on a trailing 12-month basis is lower than the PE of the benchmark, which is NSE 500. However, the ROE of the fund, which is return on equity, is higher than that of the benchmark. So we are buying essentially sound companies with we believe have potential to re-rate, but today trading at reasonable valuations. And that is reflected in the characteristics of the portfolio.
Okay, all right. Take that point. So, Hemant, similar question for you. What do you think in this case? What's your opinion? Would there be some risk involved for first-time investors here?
Yes, I think I would say that, although if you look at Contra fund composition, they are diversified by nature. And if you do the analysis of the portfolio mix, it's more like a multi-cap fund, but obviously there is a bias towards the large cap. But as I mentioned earlier, the parameters on which the stocks are selected is very different. Obviously, I feel that it's not suitable for the first-time investor. First-time investor should focus on plain vanilla diversified fund, understand the nuances of investing in equity, understand the pros and cons, and how to build an equity portfolio. And as I mentioned earlier, I think they should be including Contra fund in the portfolio, which is a must, I believe, for a long-term investor, only when they have gained enough experience, but not at the start. So there are obviously a couple of risks involved there, because what we have seen in the past, and it can happen even in future, that if things do not work out the way it is envisaged by the fund manager, or maybe there's some issue with the analysis of the fund manager or the stock selection, there can be prolonged periods of underperformance. So I think investors must realize that there are pros and cons of investing in Contra fund, and they must look at their own risk profile before they make a decision to invest in these funds.
Okay, all right. We take that point. It's a very important chat. We'll continue this, but we have to get a quick commercial break. On the other side, we'll continue our discussion on Contra funds with Shivani Sarkar-Kurian and Hemant Rustagi. Stay tuned for that conversation. Welcome back. You're tuned into MF Corner. We still have with us Shivani Sarkar-Kurian and Hemant Rustagi. We're discussing and understand everything about Contra funds in general. Hemant, let me start with you this time, because once somebody has decided that Contra fund is the way to go to invest in a volatile market, as Shivani was mentioning earlier, what are some of the factors to be considered while investing in Contra funds?
Well, I think this is a very important question. Some of the factors that every investor must consider before investing in Contra fund to begin with. I think the time horizon has to be longer than what you would usually have for a normal diversified fund, because Contra strategy is something that works over the longer term. So it's very, very important to have a longer term horizon. Second is, I think it's important to look at your own risk profile to see whether you should be investing in Contra fund at the stage that you're thinking of investing or not. As I mentioned earlier, it's not a great option for the first time investor, but for experienced investors, yes, Contra fund can be an integral part of the portfolio. Third is, obviously, one has to look at the long-term performance track record, which obviously is very important, like any other investment decision that you make for investing in equity, and of course understand the attendant risk of investing in Contra, because like I mentioned earlier, the parameters for selecting stocks and the philosophy itself is very different from what you usually see in normal diversified funds. So I think these are some of the factors that one should consider before investing in Contra funds.
Hemant, you mentioned some of the risks. I'll just come to you in a bit, because while we talk about returns, very important to understand some risks involved in any asset class for that matter. But Shivani, let me come to you for that question. What are some of the major risks which are involved with Contra funds and investors should be aware of if they are looking at this particular category?
Yeah, absolutely. So obviously, first and foremost, it's an equity fund and it's a diversified equity fund. So the normal risks that you associate with equity is something that one has to bear in mind. Secondly, as we were earlier discussing as well, these are stocks and sectors which today are undervalued, which have underperformed the index over a period of time, and therefore we are investing in it with the view that there will be re-rating of multiples, or there will be some improvement in terms of basic characteristics of the company or the sector, which will help in terms of multiples coming back on track. And therefore, from that perspective, the investor has to keep in mind that some of these play out over a period of time, and hence the actual time horizon, as you were actually discussing just earlier in the question, has to be slightly longer, because in order to realize the full potential of that particular opportunity that has been identified, it might take time, and therefore that is one thing that everybody has to essentially keep in mind. For us, when we are evaluating a company, as I said, the starting point is of course the 5 parameters that I had put in place, but finally we are on top of that imposing our own fundamental analysis filter, and therefore specific issues in terms of business, management quality, corporate governance, those are risks that we continuously evaluate and finally take a decision in terms of the companies that go into the portfolio. So for an investor, of course, keep in mind it's an equity fund, it's a diversified equity fund, and there are risks associated with equity. But also because it's contrarian in the very nature of the fund, you will have to give it some time for that entire thesis to play out.
Okay, absolutely. If it is for short term, there could be volatility. For any thesis to work out, you have to give it some time. Hemant, would you like to add something onto this, the major risks involved here, and what should an investor be aware of?
No, I think just like I mentioned earlier, there are a number of risks, but I think one of the important factors also, as I mentioned earlier, is that if things do not work out the way it's anticipated by the fund manager, there can be prolonged periods of underperformance. So I think it's very important for investors to realize that he or she should have the wherewithal to wait out with this prolonged period, because for someone who is not experienced investor, he or she can get a little jittery when the performance is not there, or when you see other category of funds doing very well in their portfolio. So it's very important to understand and always keep focused on the reason why you have invested in a contra fund, and also understand how contra funds behave over a longer period. So I think it's very, very important to understand, like I mentioned earlier, the pros and cons of investing and how contra funds behave, and then take the plunge.
That's exactly why we have experts like you and Shibani on the show, to make the viewers aware about the pros and cons of every investment that they make. Shibani, you were speaking about how value is the reason, reasonable valuations, the contra theme is the reason why this particular asset category or this fund is formed. So can we say there's no difference between a contra fund and a value fund? Both would work better in volatile markets. How can one look at these two categories separately, or they have to be seen in the same way?
So when contra is usually evaluated, it is evaluated in the value category. But for us, if you look at the way we manage quota contra funds, yes, there is a value bias to it, but it goes beyond value. So it's a value plus for us. So the way we look at it, as I said, if you look at the investment universe, the universe has to be companies where multiples or valuations are reasonable. The sector or the stock should have underperformed and hence not in favor at this point in time. And therefore you are investing contrarian to the market, and hence there is a value bias to it. But for us, most importantly, we are looking at companies where we see triggers for re-rating of multiples, something that can change in terms of the composition of either earnings, it could be a management change, it could be change in terms of characteristics of a particular sector that finally lead to re-rating of multiples. So for us, a stock coming into the portfolio, while there is a value bias to it, it is not just value, it is something on top of value where we are seeing a trigger for re-rating, and hence the theme of contrarian investment as we are calling it. Now for us, for instance, if there is a growth company which has, for example, underperformed in the last 1 year, is trading at multiples which is lower than its long-term history, that company can also form part of the portfolio if we believe that the multiples re-rate back to their own average historic multiples. So in that sense, contra fund would be slightly different from just value investing. Yes, there is a value bias, but I think it goes beyond value when we are looking at the composition of the portfolio.
Okay, take that point. Hemant, in that case, how big is the contra fund AUM in the industry? And out of the ones that we have, do you have some recommendations? And do you think this category should be definitely a part of anyone's portfolio?
Well, yes. I mean, if you look at the current AUM of 3 contra funds that are available right now, I think the total AUM is roughly around 59,000 crore, which is maybe around 1.5% of the total equity AUM. So obviously, the total AUM is not as big if you compare it with the overall equity AUM in the industry. Yes, I think a couple of funds that can be considered out of what is available is SBI Contra Fund and Contra Fund. Both these funds have done very well. Of course, the investment philosophy within that is slightly different for both of these. But I think both of funds can be considered for investment. You had some more.
It definitely be a part of someone's portfolio.
Oh yes, definitely. As I mentioned earlier, I think for any long-term investor, a contra fund can be an addition in the portfolio to improve overall portfolio return. I think to supplement your long-term portfolio. Definitely. But I think it's very important to also ensure that you're not investing in a contra fund very aggressively. While there is a thumb rule that maybe you can have 5 to 10% of your portfolio in that, the thumb rules do not take into consideration your own personal profile. So I think it's important to also look at that and then decide the quantum of exposure to contra fund as a category.
Totally take that point, Shubhani and Hemant. Such a pleasure having the two of you on the show. It is a masterclass in contra funds, so thank you for enlightening us with your thoughts today. But with that, we have to take your leave on MF Corner today, but stay tuned for Closing Bell to take you through the last hour of trade.